I'm very much looking forward to this session because what we want to do is to bring it down a little bit to actually talk about our experience around this subject rather than what we hope to have in place or what the future necessarily holds, although we will touch on that. Our speakers are going to talk about their experience around the subject and possibly some of the challenges and frustrations. But just before we start, on your WhatsApp app, if you scroll down to this session, and what I want to do is generate a word cloud, or try to generate a word cloud around this subject. So if you click on tasks, that will take you to an area where you can input. And I'm asking you what one word comes to mind when you think of trade asset distribution. So I'm just after one word, and we'll see what the room and also everybody online, what it is you think about the subject. So that will be generated, and we'll have a look at that a little bit later. Just to remind you, of course, we're very happy to take questions from you, so please send those in. I've got one already, which is pretty good, isn't it? And I'm sure that our speakers' presentations will generate some questions as well. We have two people joining us online. The first one is Nils Behling from Tradeteq. And Nils, I looked at your website, and I don't know if this represents your whole presentation, but it says you do technology for bank asset distribution. So I think that fits our subject matter very well there, and I'm sure you'll go on to expand on that. We also have Peeter Koppel, who is from SEB Estonia. So we have a Peeter, we have a Peeter. I say tomato, you say tomato. Let's call the whole thing off, as the song goes. And we also have Nana Khurodze from EBRD. Very nice to see you here. And we've heard a little bit already about EBRD, but it will be very interesting to hear your view, because I know you have a lot of experience with EBRD and with another organization before that in that particular area. And then finally, I'm delighted to say we're joined by Thomas Krieger. Thomas, nice to meet you, I have to say, for the first time, because you joined us quite late on to this party. So thank you very much for finding the time and taking part. You're from Commerzbank, which I'm sure we know already has been mentioned, has good experience in this area. So just to remind you on the word cloud, if you haven't input your one word yet, please do that, and it'll be interesting to see what comes out. Thomas, just to tell you, we're taking all the speakers in order, and I suppose the bad news might be that you're the last speaker that we're going to hear from, but in another sense that's a good thing, because everybody will remember you and they won't remember the other ones. So I'm trying to get out of a hole there. So Nils, can we come to you, please? And perhaps you can tell us a little bit about Tradeteq, and particularly the distribution of assets, secondary markets, and your sort of involvement there.
Yes, thank you, Peter. Delighted to be with you. Can't be in the room, but hopefully this is a good remote experience as well. I hear myself. That's good. So I know that you can hear me. Um, Let me tell you a bit about Tradeteq and what we do in the sector and why we exist, what our mission is. Peter, you mentioned you had to look at the website that, by the way, everyone can find under www.tradeteq.com. But we are a London-based fintech that is very much focused on the distribution of trade finance. And we do that across a number of products. And I'll go into that into detail, maybe a bit on myself first. I'm banker by background, not a trade banker. I come from investment banking, so trade finance was a new thing for me. Through stages at Trafigura, most notably, I moved towards trade finance, and what I myself and my co-founder, Christoph Gugelmann, who is also an ex-investment banker by background, found pretty quickly is that distributing trade finance is not easy, and there is a lot of friction, there is a lot of complexity when investing in these assets and selling them down. And that brought us to founding Tradeteq. We're now about 60 people. We have offices here in London, where our headquarters is, and globally we're in Frankfurt, Germany. We're in Singapore. We're in Dubai. We have a very large development team in Ho Chi Minh City in Vietnam, and most recently we have moved to Liechtenstein as we are entering the token trade, issuing of tokens. What we do is we enable the whole distribution of trade finance across a number of products, and that goes from the core trade, the core FI risk distribution, as it's called, with our Connect product, where we connect counterparties like Commerzbank, with whom we work very closely together with Thomas and his team, and you'll hear from Thomas in a while, with parties like AKA Bank or insurers like Swiss Re, Liberty, and help them to sell down these core trade products, letters of credit. The last presentation was talking about it, distribution of letters of credit, of guarantees, that sort of thing. And that's one of our products that we're very happy to scale with a number of banks. Maybe even more importantly, though, we do also offer access to trade finance for non-bank investors. And I would say we were some of the first ones, one of the first ones to do that as a SaaS product, as a platform to enable this. And we do this by way of taking trade finance assets, and it can be any type of asset, and repackaging these into either notes or laterally also into tokens. We do are issued out of Liechtenstein, and they can be easily bought and invested by non-bank investors. Tokens is a relatively product. We started going into token space in September last year. SBC Network. They're a trade finance focused blockchain. And we have so far issued non-fungible tokens, repackaging our Luxembourg issued notes into trade finance products. But we have now also started, just about to launch it, the distribution of native tokens out of a specialized company based in Liechtenstein, and these will be able to be purchased by pretty much anyone. And that really opens up trade finance not only to investors, where we started our journey, but very much also then to a much wider investor base. That is the existing product set that we have developed, where we work with some of the largest counterparties out there. Already mentioned Commerzbank, aka Swiss Re, but we also have a number of very large investment managers, Federated Hermes, Santander Asset Management, and other very large players that are using our services on a daily basis, really. Of course, everything we have built there then is built to a bank grade. We're fully ISO qualified, 27001 and ISO 9001. So it's all done to a bank grade standard. And we're just about to launch a new product, and now I think the slides could be brought up. That would be good. And I have prepared a few slides on that might be very interesting to the audience today. I can't see the slides, but are they up? Yes. So there they are. And so one question that has been brought to us many times, and that's sort of one of the complexities in this space, is how do I get, as an originator, how do I get access to funders who want to invest in trade finance, and as an investor in trade finance, how can I access originators? How do I find trades? How do I find products? And can you help me there? And that's one of the big questions that has been brought to us many times. What we see is, although the interest in trade finance has significantly increased, the offer and the demand don't always match. And so what we have done, and if you could allow me to see the screen, then I can see on which slide I am, because I can't see that from my end, unfortunately. What we have done, we have launched the Tradeteq marketplace, and this is a new product that we're just launching, and it's essentially a venue for originators and funders of trade finance products to connect, to interact and transact. And by originators, we mean, of course, banks, but also very much non-bank originators, factoring companies, online platforms, anyone who funds trade finance, let's call it invoices, and is looking for funders for these. As an originator, you can come to the platform. You can create a profile, you can present yourself, but you can also list deals, and these can then be viewed by funders. And we provide this venue, but we also provide ongoing visibility, reporting capabilities once a deal is done, once perhaps repackaging is done, once direct distribution is done, analytics, any type of reporting up to solvency reporting if required for insurers. Anything is done through the Tradeteq platform. So the marketplace really then fits in with our whole dedicated deal execution and post-trade infrastructure, and it's really built to be very usable, and it should be the answer to the question, can you show me deals? Can you get me in touch with capital? Can you get me in touch with opportunities? One important point to note, and I have highlighted here on the slide, is if you join as a funder, if you join as an investment manager, effectively there is no fee to access the marketplace. That should also be an attractive feature for the originators, because we think this will attract a large number of funders to come on, look at their deals, see if there's anything there, and then hopefully do transactions. And maybe lastly, joining is very easy. I've put an email and a link on this website, on this slide. If you're interested either as a funder or as an originator, you're very welcome to join this platform. Please reach out to us. We can help you to get going, but effectively it's 4 easy steps. You sign up to the marketplace, you use the link or send us an email, and we help you to set you up. You upload your assets, your presentation of your business as an originator, And then as soon as funders come on, see your transactions, you will get notifications. They can leave messages for you. And we can also then finally help you to execute the trade, help you by using our standardized documentation, our repackaging abilities, and everything that we offer once the deal is done. And that was a brief introduction to Tradeteq. I think one last thing to note that might be also interesting to the audience is we are the official technology provider to the Trade Finance Distribution Initiative. The Trade Finance Distribution Initiative is an initiative that was initially started by HSBC and Standard Chartered together with Tradeteq as a fintech to focus on how to make trade finance an investable asset class and how can we move from this pure bank-to-bank distribution to a much wider inclusive market, what's needed, what is required. ITFA, of course, is part of this this initiative, and it has grown to, I think, by now, from this very small core of 3 participants to over 60 major institutions. If pretty much any large bank is a member of this initiative. And I would again invite everyone have a look at the website. Trade Finance Distribution Initiative. TradeFinanceDistribution.com is the website. TradeFinanceDistribution.com. There is all sorts of material there that should be of interest. We produce a regular podcast with market participants that share valuable insights and thoughts. There are white papers, there are publications. And we now also start again together with ITFA to organize events to bring together industry participants. And with that, I would hand back to the room, and maybe there are already some questions.
Okay, thank you, Nils. Very interesting to hear what you're doing there. I do have some questions coming in, but I'm going to keep them back just a short while because then a number of people on the platform and also online may be able to answer them. If I can now turn to Petra Koppel from SEB. Over to you, Petra. I think you have a very different outlook on this.
Well, I wouldn't say that completely different, but I would say that the trouble that I am having is that this asset class, as was mentioned by the speaker before me, that there is an effort to make it investable. And this effort is something which I would say I, as a private banker, see that this effort is not yet far enough. Because what I see huge amounts of liquidity, huge amounts of money sitting on the deposits, but junior level private bankers and even senior level private bankers do not consider this, what we're discussing today, as an investable asset class. They don't have education regarding that as of yet. When I look from the client's side, then what I see is, once again, they have huge trouble with the excess liquidity that they're having that is sitting on a deposit, which, yes, the interest rates are going to go a little bit higher. They're going to be earning money on their deposits, but they're going to be earning, unfortunately, at least in euros, negative real rates for a long period of time. So they would actually need to, I don't know, should I call it hedge, or should decrease the amount of negative yield that they are earning, so to speak. And for this asset class to become investable, I know tokens were mentioned. When I look at private banking clients' profile, this is going to be scaring them off quite rapidly. What they want to have is that the wrapping would be similar to instruments that they are already having. Similar to instruments that they already having, and what they usually have are stock, bonds, and funds. So we are talking about funds. Now, if interest rates are going to continue going higher, then perhaps this asset class that we are discussing today is going to be competing against something which is understandable. Money market funds usually are understandable for this source of liquidity that I'm talking about, wealthier people and high net worth individuals. This is understandable. There you also have issuers which are known to them. There you have daily liquidity, which is not, it's comfortable. And at the same time, you have this asset class where you could actually have a better yield, but which is not yet understandable, which is yet to be packaged, or is packaged indeed in certain cases, but it's not widely known. And the one trouble which I also see is that in order to be made understandable for wealthy individuals is what risk are they exactly taking? Because if you look at bonds, more and more people, or most of them, understand what is a rating. They understand it. They even can talk about default rates. So they have a grasp on the risk. But in this case, I might understand where the risk lies, but they don't. So what I would say is that the wrapping, in order to tap wealthy individuals, the wrapping would need to be something which is similar to the stuff that they already have. It would need to be very transparent, and it would need to define the risks as clearly as possible. And then, of course, the gatekeepers to such wealthy individuals, like the private bankers, they would need to be educated. So these are my sort of main three issues when I consider how to tap this source of liquidity, which I, in certain ways, represent.
Nils, I guess you would say that on your Tradeteq platform, you are providing transparency and you are providing guidance around the risk.
Yes, I find these points very, very interesting, and I think that they're very, very relevant, and that's sort of the, if you will, the objections or the questions that always came up continue to come up, obviously, understandably around this, and this is exactly what we're trying to address. So I think it's the three key areas. Again, it's the wrapping, it's the risk transparency, and the education. And on the wrapping, I mentioned the tokens, but that, of course, is sort of a bit thinking to the future, and it's edgy and interesting, and I think it's good to mention on a panel like this. But really I'd say our bread and butter business is repackaging trade finance into investable notes, which are effectively bonds. They're issued out of Luxembourg with a Euroclear settlement directly in the custody account of an investor. And this is something that we do in very large volume. And it means that any investor who has a custody account who qualifies can buy these as they would buy any other bond that comes with an ISIN. And that's a very traditional product. I think as it pertains to the risk transparency, again, it's something that we're very aware of. We provide credit analytics. We provide machine learning driven. We have a whole team of machine learning analysts, machine learning driven credit scoring on assets, and through the platform we provide the highest degree of transparency, asset level reporting, portfolio reporting, aggregation, any kind of report you would need as an investor to understand what's really going on. And I think the last point that probably goes back to the Trade Finance Distribution Initiative, the efforts we're making there, together with these over 60 global banks and investment managers, that's really focused on education. That's focused on making trade finance an investable asset class, not only from the technicalities, but also from a educational understanding perspective. So I think we're addressing all 3 points, which again I think are very, very important and need addressing.
I've got a question here which has come from the audience, and it says, realistically, how much confidence can mainstream investors have in an early stage stroke fintech's credit models and policies? How can fintech originators mitigate any concerns? Peter, I don't know if you want to comment on that.
I would actually say that this is once again, I will sort of represent, or am sort of gatekeeper. This is, in my case, actually my problem, and this is the private bankers' problem. If we validate the model and offer it to our customers, then we are responsible for it. And to be honest, private banking customers trust us in that sense. Now the question is that do we trust ourselves the models? Well, it depends a bit. It depends. It depends on, for example, whose risk are we really taking on? Do we know the participants? Then maybe the model is not the most important thing at all. Then maybe the fintech is not the most important part of it all. If I can pinpoint whose exact and what risk am I taking or is the client taking, and if I can explain that to the client, then it's not that troublesome to trust the fintech, so to speak.
Nils, briefly, do you want to respond to that? Because I'm sure you have something to say about instilling confidence in the investors.
Yeah, I think
giving the investors confidence in you.
I think it's the same actually for any business that is active in finance, but probably in any business really. How do you instill confidence in your consumers? Well, you have to be true to your word. You have to be delivering what you promised to deliver, and then there's of course certain boxes you can tick, although it's more than a box ticking exercise, of course, but there are certain things that you can deliver. I already mentioned ISO certifications. SOC 2 is another certification that is important that banks like to see when it comes to information security. It's the partners that you work with yourself. In our case, everything that we do is built on Microsoft Azure. Everything is done to the highest security standards. We allow our clients to hold all their data in segregated pods without any commingling with other clients' data. I mentioned that we have a Frankfurt branch, which really is the outcome of the fact that post-Brexit, in dealing with our European clients, they demanded that we have a European presence. So we had to adopt to this. And of course, all that adds to being a credible counterparty, making these efforts, keeping up these standards. But by and large, I think again, it's the same for every business. If you want to compete and offer a compelling product, you have to listen to your client and deliver to them what they demand.
Thank you. It leads me quite nicely to asking Nana if you could tell us a little bit about EBRD and your TFP program. Sure. The reason I say it brings us nicely to you is because I think what EBRD does around structure and finance can help to inspire confidence in the finances that you're working with. But over to you.
Thank you. I put some slides together, and if you can pass the remote, please. Thank you. I think it's important that I introduce the program in a little bit detailed way. My name is Nana Khurodze, and I represent the trade facilitation program of EBRD. Ian mentioned about EBRD support in trade finance and our new initiatives in supply chain finance program. I will expand on this, and I will talk about it in a little bit detailed way. So our program facilitates trade on each stage of its development. Sorry, can you make it a little bit bigger, please? Because it's difficult for me to see the... Yeah, so in our program, we facilitate trade of all stages. So it's export, production, transport, storage, distribution, and receivables. And main products of our program are guarantees, short-term loans, cash advances, and factoring. So I will be talking today mostly about the guarantees and factoring product, which is, I think, in line with the discussion that we have today. And just to show that the structure, how it works. So some numbers about the program. It was established in 1999. We work with more than 120 issuing banks in 30 countries. A number of transactions since inception that we supported are 29,000. We have facilitated trade amounting to 27 billion euros, and we work with more than 800 confirming banks. So I will be talking about definitions of issuing and confirming banks in a separate slide because it's a little bit technical. It's important to emphasize that we continue supporting Ukraine. We work with 10 banks in Ukraine, and since inception, support that we provided in the market is more than 3,000 foreign trade transactions amounting to 3.9 billion euros. So this is the structure of the main product of our program. So how we facilitate trade and how we step into the transactions of trade is we normally have a seller and a buyer in different countries who don't trust each other, let's say so, and then they seek support from their banks. And those banks also have lack of trust. In order for this trade to facilitate and to happen, EBRD steps in and takes the risk on the buyer's bank, providing a guarantee to the seller's bank, taking risk like up to 100% of the total amount of the transaction, and giving a guarantee to the seller's bank, saying that if the buyer's bank fails, EBRD will pay when the amount is due. So so we call issuing banks buyer's banks, and confirming banks are normally seller's banks, and they normally are working with letters of credit, guarantees, standbys, that are very traditional, and we heard a lot about moving away from LCs and digital documents, but in our program we still work with the very basic and traditional products, because we need to understand that we step into transactions that normally, as I said, there is no trust between parties that want to trade, and still the level of the development on these markets are different. That's why it's very safe to use traditional products. So these are, I won't go name by name, but these are the main confirming banks of our program, and as you can see, all global big banks are participating in using our products very actively, and most active is Commerzbank, 4 years already of our program. the main priorities at the moment, priorities change because we are in very unstable situation now, but I think that for a couple of years to come, a main priority of the program will be becoming more sustainable as an organization, leading our banks and our partners also to become more sustainable and in like supporting them building greener economies and digitalization. In line with the bank's overall commitment to become more green and be like major sustainable bank, we exited from supporting fossil fuel. So we don't do any fossil fuel in our program. This is also in line with the bank's commitment that trade facilitation program established Green TFP in 2016, and since the inception we supported transactions amounting in 1.3 billion through 1.3 thousand transactions. And the examples of these transactions would be, for instance, import of energy-saving residential lifts from Greece to Kosovo, import of wind power generation technologies from Denmark to Ukraine, import of water efficiency processing technologies from Germany to Armenia, and others. This is very boring, I will skip it. I think I mentioned main numbers. A short case study, the EBRD and UniCredit supported the expansion of wind energy in Ukraine. UniCredit guaranteed the transaction of the issuing bank, OTP Bank Ukraine, who has in turn supplied a loan to the Ukrainian company Eco Optima, which used it to import wind turbines from the German company Vestas. So you can see that it's a chain that we normally support, and end user is always a company from the private sector. For this innovative approach, we won the Sustainable Trade Finance Award at the 2020 TFG International Trade Awards, which was established in cooperation with BAFT. This was just a recent award, but in general, we normally get lots of awards, and this was just recent, and we are very proud of it. Before I mention about factoring, I want to emphasize that guarantee product is the main product in our program, but we also, as I mentioned, provide the cash advances to our banks in the countries where we invest, and these are normally also the purpose of the loan is always trade finance. So we can finance up to 1 year with the revolving basis, and these could be different currencies as well. And both products, guarantees and cash advances, can be used for factoring. And I think I will be focusing on factoring a little bit longer because it's more in line with this discussion that we are having today. So factoring was approved in 2006, so it's relatively new compared to the guarantee product. The framework sublimit is 200 million euros. We have 15 facilities in 7 countries. Number of transactions 281, and the total value of transactions since inception 984 million euros. So normally the factoring limits that we provide to our banks are uncommitted, and there are no commitment fees, no upfront fees, so it's very convenient for banks to use. What we observe on markets, it's the interest is, there is an interest of using this product, but awareness is very low. And I think that from our side, we are putting a lot of efforts for providing technical assistance to banks to understand the product well and to deliver this knowledge also to their clients, because end user is always a client who takes a decision. We facilitate factoring on a domestic and international level, and normally the maximum tenure of these lines are 6 months, which is normally the cycle of the factoring. there is a structure. It's pretty much similar to what we saw in the previous slide when I was talking about the guarantee line. So underlying, we always have exporter and importer. They have export factor and import factor. And in order to for us to step into the transaction, again, there must be a payment instrument between export factor and import factor. And then we cover that risk in the same way like we do for the guarantee line. This is a good example. We just recently concluded this transaction, which was, I think, very unique. The factoring transaction was facilitated on the FCI platform between Georgian and Armenian exporter and importer. Although the countries are neighboring, so this is a very good example of emerging market situation. These are neighboring countries, but still there is a lack of trust, or there are no lines anymore available between banks, and we are still needed to step in and to facilitate that trade. I'm not talking about like countries that are completely sometimes on different continents. Yeah. So we are talking about neighboring countries which needed our support. That is the very nice transaction, which I think will become more and more in demand.
And the point is, without your support, it either wouldn't happen at all, or it would happen at a much lower level.
Yes, that's the beauty, I think, of the program. I think I would say that very often we step into such transactions that maybe would not happen, as you said. And then it's also very nice to see how banks start trusting each other. So we step in, we facilitate the trade, then banks start working with each other, and then there is trust already created between them, and we are not needed anymore. And we kind of exit from those relationships, but it's, I think, a mandate of this program that, and we are normally happy to see those kind of arrangements. Again, some case studies. A Greek manufacturer of light metal packaging locally distributes its products. The domestic receivables are financed by a factoring facility with funding provided to Piraeus Factoring, Greek factoring company, under its TFP factoring facility. Export receivables. Under a transaction supported by the TFP, Romanian producer exports cables to a Scandinavian telecom company. The export receivables are financed by a factoring facility with funding provided under a TFP factoring facility. A very important part of our job is inviting into our transactions and into business the private sector players. When we don't have sufficient lines, for instance, or there are some other different reasons, we cooperate with our insurer companies, and we offload the transactions, and we facilitate trade together with them. So this is the list of most active partners that normally are not visible in transactions, but they are very important for facilitating this trade. Another aspect, very important aspect of the program, it's technical cooperation provided to the markets, to the banks. Very often, that is also a core element. Without it, very often trade cannot be facilitated. In trade cooperation, technical cooperation, we mean capacity building, sharing the knowledge. We have different tools and pillars for that. These are online courses, networking events, face-to-face workshops, policy dialogue, some tailor-made consultancies. So it's very diverse. We can provide any kind of consultancy, I would say, if we find the angle with the trade finance, supply chain finance, and very often the consultancies that we provide are focused specifically on those areas where bank thinks that it's in high demand, and it's not only for banks, but can be provided to their clients as well. yeah, these are the courses, and some of it we saw. We very actively are working with Coastline Solutions on the online platform. But as I said, aside from the Coastline Solutions, we have different vendors that are providing courses, and we also can work with individual consultants and invite them to our program. So that's shortly about us. I just still want, because it's technical, and I decided to put it into slides. If there are any questions, I would be happy to address.
I've got a question here, which you may be interested in. Do you think there's scope in the countries of interest of EBRD, which we heard is Eastern Europe, Northern Africa, Mongolia was also mentioned as well, all the former CIS countries. Do you think there's scope there for the take-up of electronic documentation? Because I gather from what you're saying, it's either at a very low level at the moment or doesn't exist at all.
Well, we see some efforts. Banks are... Well, I am talking about banks because normally, as I said, we work with banks. Later, I will also mention about our initiatives to work directly with corporates. But so the experience that I can share, it's more coming from the what we see, what is happening on banking sectors in our countries. And as I said, they are on very, very different level of development. So we see some efforts, but at the moment, it's a very, very slow process. It's in our program, everything is based on original BLs, packing lists, invoices, so it's very, very traditional. And what we do in the program, we try to invite for discussions our banks and providers of the digital platforms so that they can somehow understand what is happening on markets, because one thing is that when you are a global big player in developed country, it's very easy, you have access to digitalization, but another thing is when you are a bank, I don't know, in Tajikistan for instance, it's a different story. So we invite for discussion our banks, the platform providers, so that partners understand what is out, you know, what is happening in the market, and if these solutions are suitable for them. But we also need to understand that these solutions and these like digital platforms, they need to also need to match with the regulations on those markets, with the core banking systems, which is also a big challenge. It's also costly. There we can also step in and help banks to, you know, somehow afford, you know, that, but it's very costly.
But Nana, it's been very, and sorry, in the interests of time, I think I might have to move on, and Thomas is being very patient waiting for us, but you've given us a very good idea of how you enable secondary markets, how you enable structures so that finance of trade assets can actually take place to a higher level than might have taken place otherwise. Thomas, I see you're still there. Thank you very much for your patience. Now, Commerzbank has been mentioned a couple of times already during the day, always in complementary ways, of course. And I suspect you have, if not yourself, the bank certainly has examples of probably payables finance programs. But I'll hand over to you, Thomas, to contribute to this afternoon's session. Over to you.
Yeah, thank you very much. I hope, I can hear you can hear me. It's a pleasure to be invited to this panel, and especially because the question that is raised for this panel is how can trade asset originators connect with new sources of funding and of liquidity, and I would extend this to of new sources of risk coverage. And it's almost a perfect match to follow Nana's presentation of the EBRD because, as you could see, Commerzbank is using the program very, very actively and has used that for at least the last 20 plus years. So we can tell, and I would like to give you a brief warm-up by the presentation. We need to look at the secondary market, and we're talking about the in this panel the practical aspects, but I would also like to, in the end, come to the point of looking a little bit at the future of what is needed and why we are very, very interested in all types of coverage solutions and technical solutions. So if you allow, I would just like to give a brief introduction on Commerzbank and our position on trade finance, challenges and solutions. I hope you can see the slides. Yes, it seems to work. What is our focus in Commerzbank? As our name already says, it's commerce, so it's commercial. We've been founded in 1870 as a commercial bank to facilitate mainly and also foreign trade. So our focus customers are private and small business customers on one hand, but also the corporate clients that we try to deliver trade finance solutions to, because you will remember Germany is or has been number one exporting nation for many years. We've lost this first position to China and United States. They alternate between them. Last year we were number 3 on a global level. But you can imagine being number one bank of foreign trade in Germany means we have a lot of assets on our balance sheet that we need to handle, provide with capital coverage on our side, and therefore also in some cases we need to address the secondary market, and the numbers that we are moving there are quite considerable. In Germany, we have a market share of 30% in foreign trade, so this also gives you an idea of the importance of our international trade finance business. And therefore, we are active with branches, foreign branches and representative offices in round about 40 markets worldwide. Before I get a little bit more into the trade finance side, I would like to briefly mention sustainability also, which is something that is keeping all of us busy, and I think it's very urgent to address this topic on a global level. So we are at the same time, parallel to trade financing, also helping our customers to transform their businesses by advising in consultancy to become more sustainable, and we are trying to transform Commerzbank as a company or as a bank, as an institution, to a more sustainable market player. And one contribution, for example, is to consider international conferences where we, as you can see, now just link to via internet and can hold a presentation without traveling there and still be part of the international community. I think we all have to reconsider the way of doing business compared to as we have done that in the past, also under this aspect. Now, going back to trade services and trade financing, what does that mean? How do we do that? It's on one hand, and we've seen this in the other presentations, I will not stay here very long, by targeting the risk mitigation through various instruments that we all know. So we in Commerzbank, we cover the country risk on one hand and the counterparty risk on the other hand, by our instruments and by our confirmation or financing tools that we offer to our corporate sector. We provide liquidity and liquidity protection by purchasing of receivables under letters of credit negotiation and medium and long-term financing. So these are the classical tools, and you've seen in the EBRD presentation that in a second step, then we need to cooperate with international institutions or the secondary market, insurance companies and risk participants in order to do so. Now, what are the challenges? And this brings me a bit to the question of this panel. What are the challenges to the banking industry currently? We have some external challenges. You see the political changes and military conflicts. I think all of us are aware of that and shocked by what has happened during the last 3 months. We did not expect that, and this is putting a lot of burden on all the financing industry, as well as, of course, on the people suffering from the war in Ukraine. We do see new trade corridors that are shifting the risk structure in our portfolio. These trade corridors are opening. We do see supply chain interruptions, which increase tenors and therefore might increase the risk. We do see a rise of global inflation levels. We do suffer from an increasing and continuously increasing regulatory pressure that is adding to the cost level of us as a bank. And internally, I think we all know this, there's a continuous question of keeping costs under control and managing cost-income ratios. We have margin pressure that persists also in trade financing. And we have to undergo structural reforms, which in part have been delayed, and therefore they might come late and become more costly. So you can see there's plenty of challenges that I've just summarized the main ones here on this slide. And now the question is, what are the solutions? On one hand, we do see the solution in standardizing ever more internally, standardizing externally, for example, on the KYC process, which is ever more driven by regulation, ESG, so the environmental, social, and governance aspects that we have to keep under control and further develop in our portfolios. And we have to distribute risk in order to use portfolio theory, so a distribution of risk on various shoulders, and being able to further enlarge our own portfolio of assets that we can then take in helps to mitigate the risk in our portfolio. And we have to digitize. So that is where Tradeteq comes in, or other initiatives such as Marco Polo that we are working on. We do see an urgent need for further digitization in order to control costs. And we don't know always what will be the market solution, the surviving market solution. So we do see, talking to counterparts, a little bit the chicken and egg problem. Okay, how many participants are already on platforms? And maybe there's a new platform coming up and there's not many participants yet. So institutions are waiting to join or hesitant to join. But we in Commerzbank see the need to further digitize, and the alternative of not doing anything is not an alternative. Although in some cases we might not find the perfect solution by digitizing all of our processes, but it's an urgent need. So these are the challenges that we are facing, and the solutions, partial solutions that we are looking at in Commerzbank, and I think that the industry needs to look at. And by doing so, if we look at the secondary market, by standardizing, for example, through platforms, we think, and if I remember Peter's contribution as an investor, we need to have solutions that make us better understand, he called it transparency, the portfolio composition that we can offer, and the investor through a platform can better analyze the composition of a trade finance asset portfolio, and therefore maybe open up to an investment. So the other point that Peter was mentioning, the educational part, of course, is important. But we do see, for example, using Tradeteq, if I may mention that again, you will have and we expect that we will have a better reporting tool to show to our investors or to the investors, and for example, asset managers that for the time being find it difficult to invest in trade finance assets, because trade finance is, as we all know, we've talked a lot about during this convention and conference about letters of credit and the complication of handling these. That is very difficult for an asset manager who maybe normally has a fund of stocks or bonds to manage, to understand a trade finance asset portfolio. And platforms can help to better increase transparency of such a portfolio, and therefore educate investors, make them better understand the overall risk of such a portfolio, and a daily reporting, which can also be delivered by platforms and market platforms. So we do see there is a potential opening up. And to go back to the question of the panel, what can we as trade asset originators do, and where do we see new sources of liquidity? We do see this also in fintechs that provide platforms to render more transparent our portfolios and open up to different asset investors and potential investors of the asset management industry, for example. So this would be my contribution, and of course I'm open for further questions and the discussion, which I think is very, very interesting to understand where the market is going. Although the panel was to concentrate on our experience, we do see the challenges, as you can see here in this last slide. So distribution and secondary market trading becomes ever more important for us. And therefore, we have to go into the direction of standardizing and digitization. So with this, I would like to thank the audience and thank the organizers for the invitation, and open the panel for further discussion. Thank you very much.
Thank you, Thomas. I must ask the chairman, how are we doing for time?
I couldn't see the clock.
He's waving 3 fingers at me, which is better than waving 2 fingers at me. So I'll assume 3 minutes, something like that. I've got a couple of interesting questions here. They don't exactly follow on, Thomas, from what you said, but a number of people in the audience have supported these questions. So I think we should go through them. Peeter, you might want to answer this one, or if not, then pass it to somebody else. How can we convince investors that concentration risk in high quality payables portfolios is not the end of the world? Now, it seems to me concentration, but it's high quality. You know, there's a balance there, isn't there? Surely.
There's a balance there. I would say that you basically, the concentration means that the counterparties or the parties that you that make up the concentration, they are trustworthy. So this would be this would be something that would sell it to me.
Or Peter, you've done the work in the background to know that
yes,
it's an acceptable risk. It's all about risk assessment and risk management, isn't it?
It is all about.
I mean,
risk
if the investor is the one who's financing the trade asset, goodness me, you need to have done that work. Otherwise, you're going to have problems. Now, another question. It may be the last one that we have, because I want to quickly look at the word cloud as well, if it worked. The final question then is, and anybody can answer this, to what extent is the funding of trade, receivables, payables assets at the mercy of the trade credit insurers? Not necessarily something you can answer in 30 seconds, but does anybody want to comment on that?
Well, I can say from our experience as Commerzbank, of course, we do address the secondary market regularly, but definitely our mission is, as a trade finance bank, to be committed, and we always keep a very high percentage of distributed assets on our own balance sheet. So we are always in the transaction. And of course, the let's say 90% at least of our overall trade finance assets are on our own books and will stay on our own books. So it's just a question, like I mentioned on one of my slides, a question also of portfolio theory. We as an institution want to use the distribution of assets and to build a broader portfolio in order to reduce our overall risk. But it's not that we want to get rid of all the risk. That's by no means our intention. And we're always going along with our corporate customers, and therefore will be invested also in the next 150 years of Commerzbank's history.
But Sean, you talked this morning about it was either Abinger or Carillion. Maybe it was Carillion, where the credit insurer withdrew for whatever reason. Greensol. Okay, sorry. I knew it was one of those. And clearly, you know, credit insurers' actions can have a significant effect. Okay, I think we're going to have to wrap up there. I don't know if the tech guys can show us the word cloud. I can't see it. Ah, there we are. Okay. So we got risks, market, financiers, diversity management, securitization, investors, investor, non-bank, diversification, cash flow. Pain. I like that one.
Yeah.
Does anybody want to admit to pain? Because I agree with you. But you know, if something is not difficult to do, then maybe it's not worth doing it. And the challenge is to make sure that the pain isn't lasting and kills the whole strategy. But okay, thank you very much for anybody who contributed to that. I hope you found the presentations and discussion interesting. Nils, thank you very much for your contribution. Thomas as well. I know you had the challenge of being online, but thank you very much. And
perfectly worked.
Nana, Peter, thank you very much. And Michael, I'll hand back to you.
Thank you.